New trading week, new opportunities to make money. If you want to find out what I'm trading this week, make sure you stick around till the end of the video. Welcome back to a new video, everyone. As always, if you enjoyed the content, make sure to leave a like and subscribe. So what we're going to be doing today is going over some of the positions that I have for this week. The first position is a $24 strike cash secured put. We sold that to open at a price of $36. So we received a total credit of $36. Right now we're up $14. We're gonna keep this one till expiration and watch and see how it plays out, just because I don't mind owning the shares that we do get assigned. But if we don't get assigned, we're just gonna continue selling cash secured puts. The second position is on American Airlines, and right now we are currently down around $20 on this one. We sold it at an average credit of $45. It's currently at $65, and the reason why it dropped a lot today, we can go ahead and check right now, dropped almost 6% today, and that is because they just released some news about issuing some new shares and some convertible notes, I believe. I'll go ahead and make a video explaining a little bit more on that, and not talk about it too much in this video because I don't want to make it too long. However, the average share price that they sold them at was $13.50, and so I believe that between here and Friday, it's going to maintain relatively around the $13.50, $14.50 area. So it's going to be interesting to see whether or not we get assigned on these. However, if we do get assigned, our average share price is going to be $13.55 because we sold it at $45. So if you take $14 minus $45, that will give me a average cost basis of $13.55. So it'd be a really good cost basis, and we'd be able to sell some covered calls to lower the cost basis even more and potentially exit the trade with an even bigger profit. So overall, even though we're down $20, I'm still looking forward to holding it till expiration and basically seeing how it plays out, just because I'm not too worried about it. The next position is Ford, and I've been having the Ford position for about 2 weeks now. This is going to be the third week, and this is the one where I'm not really liking the position. Not necessarily because it's going down, but because the implied volatility is dropping, and so that means that even if I do try to sell covered calls, I'm getting a lot less premium than I normally would. That's also the reason why I haven't even sold the covered call this week, because if we go ahead and look at what the 7 strike call is trading at, it's trading around $2. So that's not even worth it in my opinion. And so what I plan on doing this one is doing something a little bit riskier, but at the same time that risk might pay off. And because I don't want to take a huge loss, right now it says we're down $84, but in fact we're actually down around I think it's around 50, I believe, because we've been selling puts and covered calls. So my actual cost basis is $6.73, and the reason why is because we sold cash secured puts to get into the position, and we've been selling covered calls for about 2 weeks now, and so that has allowed me to bring down my average cost basis considerably. But back to what I'm planning to do. So what I'm planning to do is try to exit the trade for a small loss, and the way I'm going to do that is by trading the covered call, which is one below the strike price that I got assigned. So I'm going to trade the 6.5 call, and I'm going to sell that one. So we're going to sell covered call at the 16.5 strike, and I'm hoping to get around anywhere from $8 to $10 on it. And if we do that, that's going to bring my average cost from 6.60 or 6.73 down to about 6.63, 6.65, somewhere in that range. And then if we do get assigned on the 6.5 strike, that means that we're going to lose around $15 this week. However, if we don't get assigned, that means we can go on to next week and potentially sell the 6.5 call again, and that's going to allow me to go right around break even, if not possibly profit a couple dollars. But the main reason I want to get rid of this position is because the implied volatility is pretty low, and so for the current strategy that I'm using, which is selling options premium, this isn't really the best case scenario. I could free up the cash, which is about around $700 position, and use it to invest in something that is actually going to bring in profit. Because if we're only bringing in around $3 to $5 a week, that's the cash is idling basically, and we could be using that cash to generate a lot more income than $5 a week, which is basically what the $7 strike is giving me. We can see right here it says $2, and even if we go to the next 2 weeks, on July 2nd, it's only giving me $5. Even if we go 3 weeks out, $8. So the premiums are starting to get pretty bad. I think I'd even have to go like almost a month and a half to be even able to get some decent premium. See, July 31st, and that trades at $22. So like I said, I'm trying to get rid of this position as fast as possible. Not necessarily because it's a bad position, but more importantly because the implied volatility has dropped below an ideal level to sell options premium, and now the position's not looking as good as when I initially got into it. And if I have to take a loss, it's okay. Like I said, we've been outperforming the market for about a month now. We've been averaging 1% a week, so in the grand scheme of things, a $15 loss is relatively small compared to what I've been gaining in the past month or two. But that's pretty much it for this. I have around 400 left in cash just in case I do see something else. But 400 in cash is not going to go a long way unless I plan on doing some possible covered calls. Some covered calls might do good, but I think I'm just going to stay on the sidelines for now and kind of wait and see how these positions play out. Hopefully, like I said, we can free up the 700 in cash that we have in Ford, and that will allow me to combine the rest of the buying power and hopefully buy something that's going to generate a lot more income than Ford. But that's pretty much it for this video. I will do another trade recap at the end of the week and kind of fill you guys in on how these positions end up doing. But for now, that's it, and I will see you guys in the next one.